recording. Hello, hello, hello. I just wanted to go live to show you why I was happy to lose out on 10 pips today. Let me start sharing the screen. Now, as you all know, it was NFP, non-farm payroll. So we always have a look at our Forex factory before we start trading. You can see at 2:30 Paris time, that's 1:30 UK. We have a non-farm payroll once a month, so we stay out of trades an hour either side of that announcement until the markets settle down. So I was watching that. Now this was the pair I was looking at, EURGBP. Here's the hourly scan that I take my trades off. These are my pitchforks, which are trend lines built with built-in Fibonacci based on math, as is the scan, which looks for the reversal points. So these are my lines of support and resistance. So this is where we are with the chart, and then non-farm payroll was up here. So let me go to my record. Replay record button and show you what happened. Okay, let's just increase this and let's take it back to where that started, which was here. So 2 o'clock my time. Now this is where price is at the moment. And we've got non-farm payroll coming up. So you can see that price at the moment is above 2 floating lines of support and resistance, the 62 EMA, the orange line, which is the 1-minute trend. It's well above the 15-minute, which is this pale blue line. This is an alert line at 10 pips, which I will talk about in a minute. So price is still well in the buy mode, well above the 62, above the pitchfork. Not in the trade as we're coming up to non-farm payroll. And here we are, and it's just going to start to hit there. So it hits here and it comes down and tests quarter theory. Price moves between levels. So it's broken the pitchfork, it's tested quarter theory. It didn't move. Sometimes you can get very big moves, as you know, when you get non-farm payroll. It didn't move that much. And then it carried along the 62. It's along the pitchfork, and the market's starting to settle down again. So it's just breaking the 62, but it's testing the pitchfork. It hasn't broken it down through that yet. But I can see it's caught in this wedge, which are these 2 lines, which is, you know, pitchfork, pitchfork coming up there and there. So if I show you what then happened, I get into the trade here, and let's just carry on a bit. So it's still up above the 62. It drops then. Let's just back up a bit. See if I can take it. Let me just take it back a bit. It just moved a bit fast there. So let's take it back. I got into the trade. It just broke below the 62 and it broke and retested the pitchfork. So this is the point at which I get into the trade here. Just slow the speed a bit. So I'm now in the trade and it's coming down below quarter theory. It's still above the 15-minute. And this is why I was pleased and okay with losing out on 10 pips. I always aim for a 1 to 2 risk to reward. With a 10 pip stop loss except on GB pairs. I've got my quarter theory and my pitchfork covered as my invisible barriers, protecting me against being taken out of the trade. And I'm aiming for that 20 pips, which is my trade goal. Now, I've moved it down to the 20 pip mark, but normally I would be, before I moved it to that point, I would have been up round about here for my my 10 pip, and then my alert goes off and I move my stop loss to stop profit at about 1 to 1.5 pips, which means I then have a risk-free trade. So my strategy now for the spring through to the summer is to move my stop loss to stop profit to 10 pips as I'm trailing the 62 or watching price come down, and then I'm going to hit for home runs of 50 to 100 to 150 pips, because if I just cash out at 10 pips, then next trade I've got to work even harder to get my 1 to 2, so I don't do that at the moment. So if price reverses back on me and I've got the 10 pips, fine, but in this instance I managed to secure the 20. So let's just see what happens to price. So price has started to come down. It's hit my alert. That means I moved my stop loss to stop profit at about, happens to be about quarter theory there, but I'm still below the 62 EMA. Now price will sometimes want to come back up and retest that, so you've got to be careful, you know, looking at that, but I can see it's in a strong downward trend. Now I also happen to have on this particular trade, let me just find them, 2 old pitchforks, this one and this one from earlier scans. And the reason why they're so relevant in this trade is because you can see one is down here, the purple and the green are both pitchforks. Here's another pitchfork. So if I want to extend this trade, I'm looking for another 5 pips to that pitchfork before price will stall out and reject or break through. And then down to there would have been something like 30 pips in total, but nearly 35. So I've got my clear percentages, moving it down 5, 10, 20, 25, 30, up to 35. And because of that, and I know where price is, when the ticker is going on my pip counter on my MT4, I know exactly what I'm doing when price reverses, because I've got my lines of support and resistance, i.e. my trend lines, already drawn on. So let's just see what happens. So I'm in this trade. It's now hit, it hit the 10 pips. I've moved my stop loss to stop profit, and it still goes down. Now, can you see how fast the 62 is now crossing the quarter theory? So I'm thinking, good, this is getting into being a momentum trade. Now, it shoots right down, and I could have cashed out there at the 35 pips because that is quite a fast move, and it's Friday afternoon. I didn't do that. In retrospect, maybe I should have, and this is what backtesting teaches you, because it shot down so fast. But any other day of the week, Tuesday to Thursday, with the 62 doing that, and with what's happening on these pitchforks, it could well have just carried on down through to the 35 pips and then on to there, which would have been between the orange dotted lines, quarter theory, 50 pip level, and then even down to this white pitchfork here. So that's what I'm doing this time of year through to the summer. So let's just carry on, see what happens. So now by this point, I'm moving my stop loss down following the 62, but keeping it 1 to 2 pips behind. And I can see it stalled out on this pitchfork, but I know I've got 2 pitchforks acting as invisible walls, stopping it going back up. So it's rejected, as you can see, it's rejecting off there. It hits it again, 2 rejections. So maybe I should have got out there again. It should have said, look, we can't break through here, but I can still see the 62 coming down. So I'm moving this down and then we get, it's still holding there. It comes down a third time, but it doesn't make it all the way down, and it's rejecting there again. So, but I can see it's about to cross over the 15 minutes, which is a strong sign, still staying well under the 62, which is a floating line of support and resistance. So let's see what happens. It rejects there the third time. So I still could have taken about 30 pips there, but I still stay in. And now I've moved this down to the 20 pips at this point. So I know I've covered my trade goal. So I say to myself, okay, look, I've missed it here. I can see the pitchfork is now wedging. This is starting to wedge here. It's Friday afternoon. So actually, let me just get rid of that. And the only way I know to get rid of it is to do this. So in retrospect, I should have got out there, but I've covered myself. It's come down there, but it is breaking through up through those pitchforks. So really, I know I'm going to be taken out of this trade at this point. And sure enough, you can see that they are, and that's me there out of the trade. So in all, that took me, let me just see where it, I think I got in, but if you hadn't got in there, you would have got in here. So that took 50 minutes for me to make those 20 pips, but I could have made 35 in 17 minutes, just down to there. But you can see how the analysis helps you understand your percentages of risk to reward, where your buffers are, your lines of support and resistance, and what you're aiming for. So you can have utter confidence when you're in a trade to know what you're doing, when it's time to get out, and you're not just watching the pip counter go up and down and randomly trying to grab some pips without knowing what your percentage compounding growth is on your account. So let's just carry on, see what happens, and you'll see that it's broken up through the 62, right up to quarter theory, rejecting off that. It's now getting sort of late in the day, and the 62 is coming back up, the 1 minute trend, the orange one. So it's now just playing between quarter theory and the green pitchfork. And then it in fact starts to come right back up, and now it's just sort of snugging along the 62 and testing the 15 minute, the pale blue, testing that, testing the pitchfork to the pip, testing the pitchfork to the pip again. 62 doesn't cross underneath, it's still staying above. There's crossing again. So here, this is another interesting point. So it does indeed hit that pitchfork again. But what would be the point in staying in that trade from any of these points? This is the point at which I got out. You would have been in that trade an extra 4 hours, 40 minutes. You wouldn't have made any more pips. You know, very, very painful. In fact, it's reducing the money you're being paid. In effect, this is your work. You know, to stay in all that time. So know what you're doing, why you're doing it, when to get in and when to get out. So it did drop down again, but I wouldn't have wanted, that's another, in fact, it went right down. I didn't realize they'd done that, so I haven't looked at it recently. So that's the end of day, very end of day. So it did go down another 26 pips, but you would have had to have stayed in that from there to there, would have taken you another 5 hours from 10 to 5, 10 to 4 UK time till 11 o'clock. So, and none of us usually trade that late into Friday. I certainly don't hold trades overnight. So just a short video to show you how to work out your percentages and how to work out when to get in a trade and out to trade, why you're doing what you're doing, and that you stick to your risk to reward ratios. So thanks for joining me, and I hope you found that helpful.